Good morning, everyone. I'm Greg Faranello, head of U.S. rates for AmeriVet Securities, and welcome to a special edition of Monday Minutes in Times Square. Let's talk a little bit about the outcome of the Fed meeting. So last Wednesday, the Fed, for all intents and purposes, went on hold after lowering rates by 75 basis points in the course of 2019. Our baseline call was for the Fed to lower rates anywhere from 50 to 100 basis points, fulfilling the mid-cycle adjustment. So what happened in that process? Well, Friday's non-farm payroll on a short-term basis solidifies the Fed's decision to take a pause here and see how the data plays out. So what does that mean? In the process, Chairman Powell referred to the data as having, and the outlook as having to have a material reassessment in terms of the Fed's outlook for 2% growth. So the Fed has taken the bar lower in terms of economic activity, and at the same time, the Fed has raised the bar for the potential for future cuts. On the same time, and equally as relevant, is the fact that the Fed and Powell spent a lot of time on inflation and inflation expectations, which have actually been trending lower throughout the course of 2019, despite the Fed actually lowering interest rates. So what does that mean? The chairman said that inflation, their 2% target, would have to be trading at a sustained level above 2% for a prolonged period of time for the Fed to actually think about raising rates. So although the bar for future cuts has been raised, the bar for future hikes is even higher. I'm Greg Faranello, and this is Monday Minutes.